JDMBA.com. This is John's Reporters for the 4th of May. Very exciting. Cinco de Mayo is Domani, which is tomorrow in Italian, which is funny considering it's a Mexican holiday, actually. Needless to say, market ended, Friday modest. There really isn't a whole lot, to jump on here. It's just back and forth now, and some of the earnings have all been decent. No headaches. Of course, now you have the declaration by Trump that they're going to escort ships from the Strait of Hormuz after he notified Congress that we're not at war, so the War Powers Act does not apply. I, Not technically wrong. You finished the hostilities, so to speak, but uh, blockade doesn't really count. And now we're going to be escorting ships through the Hormuz. Is that intended to draw out an attack? Who knows? It's very complicated, and the market is just kind of shrugging that off, and particularly in the Nasdaq, where everything is still the AI trade and the excitement around that, even though the circular nature of all the reinvestments are just amongst a group of the same companies, and they're all investing in the same AI growth. Clearly, they believe that it's going to be, this revolutionary thing, and it's represented a big portion of the GDP, which clearly is an indication that the remainder of the economy really isn't faring all that well. And I think that's pretty obvious with energy prices, because this has always been the case. I mean, something Trump had got right in the first term was lower energy costs lift everybody. There's just no way around it. From an NQ standpoint, this is about the future. But you can see risk wise, you're over your 100 mark on, West Texas. So that's just an indication that the market isn't necessarily believing it, and the supply constraints are having a global impact. So, yeah, he does need to get the strait moving. Will it create some kind of conflict? Is it a test of the people he's dealing with to say, hey, if you're really in control of things, there shouldn't be a problem. If you're not in control of things, then I'm wasting my time talking to you. There's that reality that sits within the backdrop, but the backdrop is the escalation of potential. Not necessarily that anything's happened, but that, a single attack on a U.S. ship from the Iranians, I think that would certainly change the dynamic again. So the market's definitely pricing that in. They're so excited about the euro because they see the war footing is getting stronger and stronger for the EU. They also recognize that, Trump pulling out troops here and there, even though the Congress has kind of blocked a lot of that, he can redeploy for various reasons. The economic impact it has within a given country when you have that many U.S. soldiers and the money they make and then they then spend in the surrounding community as well, um, it matters. In Italy, I know it does, particularly in the areas where they have bases of, Pisa, Vicenza, and places like that, or even in the south. It matters. So in Germany, also, it's 50,000 troops, significant amount of people. From a gold standpoint, still holding flat. And again, I think that this becomes one of those where we know that the suppression can exist within the paper trade versus physical. The reality is going to come, though, as soon as CPI numbers and all that start rolling out, because the inflation model is just going through the roof. And you can see it. It looks like the Iranians have gotten a pretty good handle on their bribe conditions for going through Hormuz. Bitcoin in a steady rise here. Fine, it's been extremely oversold at that. It was a natural move to begin climbing. This gave it impetus that they were demanding payment this way. They're kind of frozen out of everything else. So it clearly makes sense. And now you've approached the 80K number, still a huge distance from where you were. But, it's just part of normal cycles. So from a 50K standpoint, you can see that from early on in the day, shot up, filled it all back in. There really weren't any positive extremes except for this one right here. That got filled in pretty quick. So then we had a little gap up and we're feeding back to the 76. You're still in dramatically, elevated area. Now from my adjusted paid bar that I've been working, this is sort of what the Friday action looked like going back there people are starting to reveal it. Interestingly enough, this is more about the relationship between the dark green and the red, uh, along with the white. So you start to begin mixing them, and then what I'm doing is associating values to each of the different configurations, so that it becomes a preponderance of, do you have enough signals all fanning in the same direction? I mean, for instance, the closing of the gap of cyan to green at the same time MBI white leads. You have magenta still over, so that's quasi positive, but MBI red below the green, and also MBI blue below gray. So you get the preponderance that the shorter term hasn't quite caught up to what it looks like already the broader trend is already starting to see. And so that's why it flips colors. And then it also flipped to green right at the end of the day. But that would have even been an earlier call when you look at it from a standpoint of uh, green moving over red DOC. You have magenta already over yellow, and you already have the blue over gray at that particular stage by the time you get over to here. So it begins to become a dynamic shift. And it also prevents any one of the individual characteristics from causing an inversion or a flip in signaling. And then really tightens things up a bit, gives you a better construct of what the idea is. Where it gets interesting is once we pass the extreme points, and that's where these 25 and 33 level become relevant, because uh, you get an exuberant that sends you through there, but that isn't necessarily an indication of those maintaining a move within that. Those become your sort of like momentum carriers. And it's once you get past that that we then start looking at, and it becomes relevant, because you'll see this a lot when we go back and look at the ranges where magenta and yellow stay above 25, or particularly when they're well above 33. You get these extended long upside rallies, and fades that go in between don't really change much on the 50K charts, that kind of thing. That's why it's good to look at a 5K where we're like really tight to the action. It doesn't take very long for any one of these candles to form. It can be seconds or minutes, depending on the volume of trading action. And that's why I like the ticks, because it's a representation of actually what's happening, not just time passing. Time doesn't trade anything. It doesn't mean anything. And the heavy reliance for regular traders on time is, I think, always been a disservice, because there's no justification for time being any relevance when it comes to trading. This is not how the algorithms are working. So if that's something that you're into with time charts, it's not giving you accurate information. You're not really understanding what's being done as far as trades. So that's a whole separate story. But yeah, this approach is going to be rather nice, viable from a consistency standpoint. It's just a matter of then working within the Morganacci lines that you end up getting characteristic builds, and then getting all the valuations of them together. But it looks all pretty clean. Anyway, that's just what's happening behind the scenes there. Anything relevant, I'll certainly put on the team chat. Have a good one. Trade well.